Hello all and welcome to our Daily Horizon View. The date today is the 11th of the 6th, 2019. This is the ASX Exchange Traded Funds Top 5s. Our spotlight today is on NDQ, the mighty BetaShares NASDAQ 100 ETF. We are here to crack your financial sky. We want to give you information and demystify the world of finances. Top 5 percentage rises today. We saw China New, Asia, NDQ, which is a spotlight, so hang around for that one. Very, very interesting. I like this ETF. Gear. BTZ robots. So China New is the Van Eck Vectors China New Economy ETF. That one tracks the MSCI Market Greater China New Economy Index. It's a relatively small ETF, $37 million or thereabouts. This that ETF is actually probably the best performing ETF on the market for the last 12 to 18 months. Done quite a run up in the share price. Moving on. Okay, let's have a look at the percentage falls today. We saw IHWL, MNRS, BER, GDX, ETPMAG, so IHWL, which is the iShares Core, MSCI World All Cap, that's hedged ETF, that measures the performance of large, mid cap and small stocks across developed market countries indexes. That's a small ETF. You're looking at about $62 million for market cap. Dividend, you get about 2.6%. Morningstar has quite a high rating on that one. It gives it a silver. We saw a percentage fall of 2.68%, which equated to a loss of 96 cents on relatively high volume for that small ETF of 4,000 shares traded. Okay, let's see what's got a rocket up its ass today. This is the top 5 dollar rises, I should say. SPY, IVV, IHVV, EMMG, ETPMPD. So for those of you who may have forgotten, SPY is the State Street Spider S&P 500 ETF trust that tracks the S&P 500 index, relatively small ETF, $31 million or thereabouts for its market cap. Dividends, just a little dribble there, you get 1.76%. We saw a rise today of $8.53, which equated to 2.09% on a pretty beautiful volume there of 100 shares traded. Let's see what got kicked in the nuts here with the top 5 dollar falls. IHWL, no surprises there. GDX, no surprises there. BER, ETPMAG, and miners. So we've seen all these ones featured before. Just the order is a little mixed up here. I think we've gone over IHWL before. Probably no need really to run back over that. But we saw a 93% fall today on relatively lowish volume of 4,000 shares traded. Top 5 number of trades, we saw VAS, STW, BTS, AAA, BGS. So for those who've forgotten, VAS is the Vanguard Australia's Share Index ETF. That one tracks the S&P ASX 300, quite a large ETF. We see a market cap of roughly $3.5 billion. Pretty healthy dividend yield here of 4.45%. Morningstar gives it quite a good rating of bronze, so not good, but not really bad, so in the middle. It's their opinion anyway. We saw 259 trades. That's pretty healthy. The overall market today was pretty quiet, as is anyway. Trades on the upside, we saw a rise in the share price of $1.34, which equated to 1.36%. Top 5 ETFs for volume. We saw AAA, STW, IOZ, VAS, and Fuel. So for those who have forgotten, AAA is the BetaShares Australia High Interest Cash ETF. That one generates income through deposit accounts in Australian banks such as ANZ, CBA, and NAB. Quite a reasonable size, I suppose, $1.4 billion market cap. You'll get a monthly dividend. The yield should work out at just over 2%. Morningstar rating of neutral. There's been quite a inflow of funds into AAA over the last month or so. We saw a volume today of 167,600 shares traded. Marginally on the upside, by the look of it, we saw an increase in the share price of 1 cent. A big mover. 0.02% rise. Top 5 ETF today for value. We saw AAA again, no surprises there. VAS, IBV, STW, and BGS. So all the big dogs there. So AAA, we saw a value of the shares traded in this ETF of $8.4 million. As I said, quite a slow day today, quite possibly after the Queen's birthday public holiday yesterday. Let's crack on into our spotlight, which is the NDQ, which is the BetaShares NASDAQ 100 ETF. So the ETF tracks the performance of the NASDAQ 100 index, before fees and expenses, all that blah, 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 malarkey. The index provides investors with exposure to the performance of the 100 largest non-financial securities listed on the NASDAQ stock exchange. By market capitalization, the index contains category-defining companies across major industry groups such as technology, telecommunications, and retail. Why would we buy? So it gives Australian investors access to many of the world's most innovative companies. They continue to revolutionize our everyday lives, such as Apple, Facebook, Amazon, and Google. Core holding of the US growth equities provides transparency and diversification benefits. Could give you tactical exposure to global technology sector. A compliant and or alternative to investments with active fund managers focused on the US equity market. We'll have a bit more of a look at some info on the next. Crack on now with the rest of the info here. Net asset value as of yesterday, $18.07. We saw a closing out today and trading just above NAV of $18.81. Market cap of $513,800,000. Quite a reasonable management cost here, I think anyway, of 0.48% for what it is. Dividend will be semi-annual, so January and July. Quite paltry, dividend yield of 0.5%, so 0.5%. Now, NDQ allows the investor instant exposure to some of the largest, most innovative companies in the global technology sector. By owning NDQ, you will also gain exposure to US equities, obviously, but also US currency. This ETF isn't hedged. Cost of the ETF, as I mentioned, is low, well, lower than traditional active managers. That's what I'm saying. I think it's quite reasonable. I think that's one of the good points about it as well. So most Australian investors should be interested in this ETF due to limited technology companies listed on the ASX, and also most Australian investors don't actually have a great deal of exposure to overseas or offshore. Over the long term, the underlying companies' prospects look very strong, and the ETF should continue to perform well. We'll have a quick look at the graph over the page, but if you're looking for alternatives, as we always should, because we were just throwing things up and doing some research on them, have a look at IVV and also have a look at ZYUS. I don't think there's really anything else on the Australian market that is direct competition to this one. But if you buy a S&P 500 ETF or something that tracks the S&P 500, is probably going to have similar results anyway in the long run. So since inception, you're getting roughly 16% increase per annum, which is pretty good. So since May 2015, so it's run for about 4 years. So you can actually see how it's performing. So the top 10 companies here, they're all quite well-known names. With Microsoft, Apple, Amazon, Facebook, Alphabet A, Alphabet B, two classes of Alphabet shares there, Cisco, Intel, PepsiCo, and Comcast. Yeah, I think it's an ETF that's worth having a closer look at if you're looking maybe for some exposure to technology companies outside Australia. Worth a closer look. Hi guys, yes, this is our little standard disclaimer. I do not know your personal circumstances, and this is not financial advice. I'm not trying to promote any particular thing here. It's educational and just showing you guys what's out there and what the possibilities are. So please take that into consideration. My mission is to crack your financial sky by demystifying the world of finances. We're here to give you information so you guys can do that. Give me a thumbs up, hit the subscribe, smash the bell so you know when all the videos are coming. Hopefully we're helping out with the information we're providing and at least giving you guys a little bit of encouragement to go out and have a look and take charge of your own financial world. Ciao.